Now, in this video, okay, it's tailor-made for if you take for students taking the IGCSE accounting. So for the video content, I will make use of two textbooks. Okay, from Pearson, this is the official one, and also from the CIE accounting course book. Okay, so I would go through all the common stuff. So there are a total 12 common topics. Okay, so we will do it within an hour. All the things exam oriented. Okay, only those things that would appear in the exam paper. Okay, I will go through all the skills very quickly, how to deal with it. Okay, now in the first topic, I would just like to spend a couple of minutes to do it. So it mainly appears for the multiple choice questions. Now the first thing you have to understand is all these stuff. Okay, so all this stuff you have to understand it for the multiple choice questions. At the multiple choice question, they will assess, okay, do you understand what happened? Okay, so can you take a look at the middle one? So you can see, starting from the purchase order, invoices, credit note, statement, remittance advices. Do you understand all of them? Okay, for the multiple choice questions only. Okay, so after the original entry, then they will go to the prime entry. Okay, with different day book. Okay, with different day book with the double entry, they will go to the ledger. Okay, so it will go to the ledger. So the steps will be like this. Okay, with the business transactions, first of all, okay, so they will put the same type of transactions in, in here. Okay, and then number two, it will go to day book. Number three, they will go to the ledger. Okay, so for the ledger, okay, they will take a look at different invoices. Okay, like the sales day book. So the total amount will go to the sales ledger account. For the individual purchases, they will go to the trade receivable account for A, B, and C. Now all these steps, they are for the multiple choice questions only. Okay, multiple choice questions only. Now, other than trial balance, so there are two ways to control it. The first one, we call it trial balance. Okay, so the trial balance is quite easy, and usually appeared in the format of multiple choice questions. Okay, but for the second way to do the control is make use of the control account. Okay, to check from any errors. So in your school, I guess all the teachers will go through. They will go through all the steps. Okay, how to do the control account. So how to do control. But I find that these steps, okay, they might appear for the multiple choice questions. Okay, so if you don't have time, okay, you may just skip it. But on the other hand, the preparation of the control account is very common. Okay, in the proper exam setting. So today I would like to go through with you how to do it. Now the steps will be as follows. Okay, first of all, you have to determine the add and the deduct. Okay, so with the add, you can have the debit. You have to have the balance brought down in the addition side, and you can have the balance carried down on the other side. So this is the first thing you need to do. Okay, so you have to determine. Okay, so where the debit side and credit side, which one is the addition, which one is the summation. Okay, for the addition one, okay, so you can have the credit sales, only the credit sales. Now, so for the other parts, okay, so you just put it in the other side. Okay, you just need to put it in the other side. So right now, okay, I would like to draw another account. So that's the purchases account. Okay, I would like to draw the purchases account with you. Then you will master it very well. Now for the purchase account, so first of all, we need to determine that, okay, for the debit side is deduction. For the credit side is for summation. Then we understand that, okay, so this one, for the balance brought down, it will be on the credit side. On the other hand, for the balance carried down, it will be on the debit side. So next, only one thing would appear on the credit side. Okay, other than the balance brought down, it will be the credit purchases. Okay, so we will put it here. Okay, so for other items such as bank, cash, purchases returns, so these items would appear on the other side, that is the debit side. So this is how we draw the total trade payables ledger control account. Okay, so it would be in the opposite of the ledger's account for the trade receivable controls. Okay, so this is the skill how we do it. In this syllabus, there are total 2 ways to do the depreciation. Number 1, we will call it the strict-9 method. The strict-9 method. So that's the number 1. The number 2 method, we call it reducing balance. So you have to calculate the amount of depreciation expenses. So this is the first thing you need to understand in this topic. Okay, the amount of depreciation expenses with accordance to the request of the question. Okay, whether they would adopt strict-9 method or reducing balance. Okay, so one thing I would like to remind you is that sometimes there are several non-current assets. Okay, they may apply different methods. Okay, for different non-current assets. Okay, so you need to take a look. Now, first of all, so let's take a look in this question. This one talks about the motor vehicle. Okay, the motor vehicle. Okay, 2,500 cost. Okay, use a strict-9 method for 20%. Okay, so you just need to make it up like this one, right? 2,500 times 20%. So this is what we call the strict-9 method. Okay, very straightforward, very straightforward. Now, but for the reducing balance, okay, it would be quite difficult. So this one you can see that, right? Okay, first of all, we will start with here, right? 8,000. Okay, 10,000, 8,000, and then not 2,000, not 2,000. This one is 16,000. 1 to actual. Now for reducing balance, you can see the amount of depreciation expenses would deducted. Okay, so the amount of depreciation expenses would drop every year. But for the strict-9 method, okay, no. Okay, for the strict-9 method, the depreciation expenses will remain the same. Okay, will remain the same for all the years. Okay, so this is the differences between strict-9 method and reducing balance. For strict-9 method, constant depreciation expenses. But for the reducing balance, okay, this one, the depreciation expenses would deduce every year. Okay, so bear in mind. Okay, so bear in mind. Okay, so for the for this one, okay, remember we make use of the net book value. Okay, we make use of the net book value to compute 10,000, 8,000, okay, 6,400. We make use of the the net book value, okay, to compute the answer. Okay, so this is the first thing would be assessed in the public exam. Okay, so that is the calculation of depreciation expenses. The second thing would be the disposal. So a lot of candidates, okay, they have difficulties in doing the disposal account. Okay, so right now, okay, I'm going to give you these 4 steps. So you just when you do some exercises, you just need to follow these 4 steps. Then you must get all the answers correctly. Okay, so I will go through all of them. Now, first of all, you have to deduct the cost price. Deduct the cost price in the non-current asset account. In the non-current asset account. Okay, so that's very, very important. Okay. The second thing, you need to debit the total amount, not just that year. Okay, but the total amount of expenses. Okay, the total amount of depreciation expenses. Okay, you need to debit it. Now the third one, so you need to record the amount received. Okay, so it might be cash, okay, or bank. Okay, so debit the cash book. Okay, to add it up. So with all these stuff. Okay, so then you may determine whether there is a profit or loss. Okay, so profit or loss. Okay, so that's how you do it. Okay, so this is the 4 steps for the disposal account. Follow all these rules, then you must get the correct answer for the disposal account. Okay, so let me remind you 2 things. Okay, first of all, depreciation expenses. Okay, you need to understand both strict-9 method and reducing balance. Number 2, you have to understand how to do the disposal account, okay, with all these 4 steps, okay, that's it. Now, the bank reconciliation statement is to suggest, okay, why there are differences between the balance carried down, okay, this one, okay, free actual, right, you can see the book, okay, the balance carried down of a book is cash book is free actual. So this is the record, okay, this is the record, okay, in our company's book. Now, however, okay, this one, no, for the bank statement there is an overdraft, okay, that means a negative number, okay, negative number, okay. So right now, okay, you have to take a look, okay. So so the uses, the purpose of, you know, the bank reconciliation statement is to explain why there are differences, okay. You can see, right, from our cash book is negative 3HO, but for the bank statement it's negative 423, okay. There must be something different, okay, in the company's book and the bank, okay. So let me put it this way, okay. The bank reconciliation statement is to explain, okay, explain the differences between the company's book and the bank, okay. So why there are some different things. So there are a few steps to do it. So number one, we have to delete the items that appeared on both sides. So let's do this, okay. Say for example, you can see, right, so there is a check 308, okay, and there's also a check 308, so we delete, okay, delete them, okay, delete, you know, just delete, okay, delete them, okay, delete, delete, okay, delete the things that appears, okay, 140, delete the items appeared in both sides. So this is the first steps we need to do, okay, the first step we need to do. Unlimited trust, okay, or bank charges. So after you delete all these items, so you can figure out there are 2 items. This one is deducted by the bank. This one is deducted by the bank, but not the bank. Okay, this one is deducted in our company's book. This one is deducted in our company's book, but not in the bank statements. Okay, so we have to add it up. Right? Okay. On the other hand, this one 106 is added in our company's book, but not shown in the bank statement. So we need to deduct it. So these two items are only appeared in our cash book, but not the bank statement. So that's why there are differences between the 2 balances. So with the use of the bank reconciliation statement, then we can do it, okay. So step number 1, delete all the items that appeared in both cash book and bank statement. So step number 2, we need to add, okay, so we need to do the unpresented check, and also the uncredited deposit, okay. So we need to do these 2 items, then we can explain the differences between the cash book and the bank statement. First of all, you can see, okay, there are irrecoverable debts wrote off for 950. So in the nominal account, you need to write it off. And then you need to put it back in the income statement as an irrecoverable debts. Okay. So this is the first thing you have to do for bad debts. The second thing, for the provision for doubtful debt, you have to calculate it. Okay, so that is 25000 times 4%. Okay, 25000 times 4%. Okay, so that is 1,000. So you need to put this 1,000. into the income statement, and also you need to put it here. Okay, you need to put it here. Now, for the 25000, the total amount, you have to put it in the financial position. After deducting the net provision for doubtful debts, then you need to give the net trade receivables. So this is the thing that you have to understand in this chapter. That is the effect of bad debts on the nominal ledger, the effects of bad debt on the income statement. The second thing, the provision for doubtful debts on the ledger account, on the income statement, and on the statement of financial position. Okay. Now the last thing I would like to remind you, for the total amount of trade receivables, you have to put it here. Okay. 2500 minus 1000 of provision for doubtful debts, and you need to state explicitly the net trade receivables. Now, before we do any correction, I would like to remind you that you must understand all the errors. Okay, understand the errors. Like you can see in the left, you can see there are error of omission, error of complete reversal, blah blah blah. Okay, you have to name the terms. Okay, you have to name the terms. Okay, so this is the first thing you have to understand. It's about how to do it. It's about double entry. Okay, so you know how to do. You need to know how to do the double entry. Now, I would go through all these errors and talk about how to do the double entry. This will help you, to do it quickly. Okay, in exam. Now, the first one we call the error of transposition. Okay, say for example, okay, for 1 2 3 you record 3 to 1. Okay, for 1 2 3 you record 3 to 1. So what you need to do, you need to deduct it. Okay, so you need to deduct the amount. So you need to deduct the amount by 3 to 1 minus 1 to 3. Okay, so this is how you do the correction of error. Okay, the double entry, the amount of double entry should be 3 to 1 minus 1 to 3. And the second error is called original entry. Okay, say for example, okay, it's 26, alright. 26, so you enter 26. Okay, so what you need to do, so you need to add it up. Say for example, you need to add up debit purchases. Okay, and then credit the supply. Okay, you need to credit the account, the trade. You need to credit trade payables. So you need to add it up in this one. Okay, so the amount will be 260 minus 26. Okay, for both sides. Okay, so this is how we do it for the second one. Okay, for the third one, errors of principal. Okay, a non-current asset is entered in an expenses account. So what you need to do, for this one, so you can see, first of all, we need to debit the non-current assets. Okay, so this will help you to add it up, and then next, okay, we need to credit the expenses. So this will help us to deduct back, deduct back the expenses. So this is how we do it. And for the complete reversal, okay, very easy, right? For the complete reversal, you just need to complete reverse, do it again. Okay. For number 5, for the error of omission, okay. So for error of omission, then you need to put it, just do it, right? Okay. For number 6, error of commission. Okay. Say for example, okay, sales of goods to J. Roberts is entered to J. Robertson. So what you need to do, this is called commission. So what you need to do, first of all, you need to debit J. Roberts to add it up, but on the other hand, you have to credit J. Robertson's to deduct the amount. Okay, so this is called error of commission. Okay, this one, compensating errors. That means, okay, there are a lot of errors, okay, but they can be cancelled, like sales and purchases, blah blah blah. But still, you have to do, still you have to do correcting entries. So after, okay, I wrote something, then you can see there are some easy items like errors of omission. Then you just need to do it. Okay, for error of complete reversal, that means, okay, you just reverse back. So for these two, they are quite easy. Okay, they're quite easy, but there are some difficult ones. Okay, including errors of transposition, errors of original entries, okay, errors of principles, and errors of commission. So these 4 are the difficult ones. These 4, okay, I put an asterisk, they are the difficult one. Okay, so you have to bear in mind how to do the correction. So so all these, okay, are for the first part of this chapter. That means trial balance will appear even certain. Now, but still, there are another 5 kinds of error that involve okay, affecting the trial balance. Okay, so that means, okay, you have to be aware of the suspense account, Okay, so so these are all the main points. Okay, so number one, you have to name all these terms. Okay, you have to understand. Okay, so what is the meaning of error of omission, error of commission? Okay, so they are different things. Second thing, you have to understand the double entry. Some of them, like error of omission, they're quite easy, but for some of them, error of original entry, error of principal, they're quite difficult, and you need to master them very well. Okay, for the last one, okay, you have to understand that, okay, sometimes, okay, there are suspense account in these 5 scenarios. Okay, now in this topic, income record, okay, students always find it very, very difficult to master. Okay, so there are, okay, several rules. Okay, I would say there are total 3 items, okay, that must be assessed in the proper exam. Namely, the trade payables, the trade receivable, and the expenses account. So usually in the question setting, so so it will be like this. Okay, so there are missing figures for the purchases. Okay, there are missing figures for the sales. Okay, there are missing figures for the sales, and there are missing figures for the expenses. So candidates have to understand how to do it. Okay, so the skills would be, we will make use of the T account. Now, so let's take a look at the difficult part. So you can see, for example, for the trade payables, both the opening balance and the closing balance are given. But students, you have to understand, okay, for the trade payables, as a account of liabilities, the balance will be put in the credit side. Now, on the other hand, let's take a look at the right top corner. For the trade receivables, the balance brought down will be put in the debit side. Okay, and the credit, and this one, balance carried down, will be put in the credit side. Okay, so they are in opposite position. So that's why, okay, students always make mistake in this topic. Okay, because they put the balance brought down and carried down into the wrong position. Okay, next, okay, so let's take a look at the purchase account. Okay, so here, so for the purchase account, so this one, purchases would be in the credit side as a summation. Okay, so when you purchase something, okay, you owned more to the trade payables. Okay, you own more to the trade bill. So this one is the missing figure. Okay, so what we need to do, you need to find out the cash paid. Okay, so the cash paid, indeed, okay, it will be deduct, right? So after you repay the suppliers, okay, so the amount you owned will be reduced. So we'll put it here. Okay, so so the steps will be like this. Okay, when we do the incomplete, step number 1, so we put down both balance brought down, carry down. Step number 2, we figure out the payment to suppliers. And step number 3, we will figure out the missing figures. So 3 simple steps. Okay, we will do it again for the trade receivables. Okay, step number 1, we would put down both balance brought forward and balance carried down. The step number 2, we have to look for the amount, okay, you received. The amount you received. Okay, so the amount you received here. Okay, so you can see right here, 5,000. Okay, here, so 5,000 by cash, and okay, 9,500 by a check. So here, step 2, look for the amount you received. And step number 3, you can compute the missing figures, right? Okay, with the balance carried down, you can compute the missing figures, right? 113,200 minus this one. Okay, then you can grab the missing figures. So these are the steps. 1, balance brought forward, balance carried down. Step number 2, cash paid or received. And step number 3, missing figures. Okay, or let me put it down. Okay, step 1, you try to find out the balance brought forward and carried down. Step number 2 would be the cash paid or received. Okay, the money paid or received. So step number 3, then you may find out the missing figures. Okay, so these are the steps for trade payables and trade receivables. Now another one would be goes to the expenses account, So you have to take a look very carefully. For this one, rent owned 500. Rent owned 500 is account of liabilities. So for liabilities, so think about it for liabilities. So the balance brought down will be here, right? For liabilities, it will be credit balance. So the accrued carried down will be here. The accrued carried down will be here. Okay. So for expenses, you will have to figure it out very clearly. So usually this is a trap. Okay. If you figure it wrong, if you put it in, okay, you say for example, okay, for the accrued carried down, you put it in the left hand, you put it in the right hand side. Then okay, you cannot grab the correct balances. Okay. So make sure for those accrued or prepaid carried down, brought down. Okay, you grab the correct answer. Okay, you grab the correct answer. So so right now, okay, I'm going to give you, okay, the T account for the expenses. Now first of all, for the expenses T account, so step number one, so you have to put the prepaid brought forward and accrued brought forward on the top. And step number two, you will put the you know if are there any accrued carry down or prepaid carry down in here. Okay, so this is step number two. Now for step number three, you have to put the bank, okay, the bank or cash here. So for step number four, then you can find out the missing figures. So these are the 4 steps for income record for expenses. The students always find it difficult, okay, to make balance, okay, in the statement of financial position. So today, okay, so there are some skills that I would like to introduce. So the first of the steps, okay, to do it, or the skills to do it, number one, so we have to mark down, okay, whether it's the income statement and or financial, the statement of financial position. So when you read the trial balance, okay, so you have to differentiate them. Now, say for example, okay, so let's do this. Okay, sales revenue, income statement. Revenue returns, income statement. Open inventory, income statement. Purchases, income statement. Okay, so you have to mark it down. Okay, so whether the items, okay, belongs, okay, or classified in the income statement and or the statement of financial position. For this one, statement of financial position. Okay, so you have to classify them. Otherwise, okay, so you might not do it. Okay, so this one, closing inventory, both of them. So you have to put an asterisk here. Now the second step you have to do is about the income statement. So the rules is called 2 plus 5. Okay, what does the mean 2 plus 5? Okay, that means, okay, there are 2 items for sales. Okay, for sales there are 2 items, and for the cost of sales there are total 5 items. So you have to make use of the formula. Okay, say for example, two items for the sales, and then 5 items, 1 2 3, okay, 4 5 items for 5 items for the cost of goods sold. Okay, so you have to add the purchases, add the carriage inwards, okay, and then deduct the purchase return, deduct the closing inventory. Okay, so think about it, there are total 5 items. Okay, so you had to make use of the 2 plus 5. Okay, 2 plus 5, this approach to do it. Okay, so and then you can grab the correct gross profit. Okay, and then you just minus the expenses, then you will have the profit for the year. So you can put this profit for the year here. Okay, then you can find out the answer. Okay, so I would say so the 2 steps. Okay, the first one, differentiate income statement and financial position. Okay, the second one, okay, make use of 2 plus 5. Okay, 2 plus 5. Okay, so for statements of financial position, okay, I think most students can do it. Okay, with the formula. Okay, so the formula, step 3. So the formula is asset equals to capital plus liabilities. So you can see that indeed this one is the assets, right? So this one is the capital, and this one is the liability. So okay, so indeed is asset equal to capital plus liabilities. So number 4, step number 4. So for these indeed for asset and liabilities, they can differentiate into current, that means within 1 year, and non-current. So you may make use of these 4 steps, okay? Then you can complete the statement of financial position and income statement without any error, and you can make the balances. Now for partnership, so there are 2 things you have to understand, okay? So there is a new thing called, so there's new item in the income statement. That means after profit for the year, there are things you have to do, okay? There are things you have to do after the profit for the year. And also for the balance sheet, okay, there is a new item called the current account, okay? So we will do it, step by step. First of all, you have to understand after the profit for the year, so there are a few new items. We call it interest on drawings, partnership salaries, interest on capital, and share of profits. Okay, 1, 2, 3, 4, 4 steps. Okay, so when you do it, okay, so for the interest on drawing is an add, but for the salary interest on capital is a minus. So you have to bear in mind, okay, you have to bear in mind. Otherwise, okay, you may make mistake. So after you add up the interest on drawings, deduct the salary, deduct the interest on capital, okay, in accordance with the question, then okay, you may share the profit, okay, you may share the profit. Now for the sharing of profit, you have to take a look the ratio given by the question. Okay, now if there's no ratio given by the question, it will be shared equally. And let me repeat, okay, it's quite rare, but if you find out there are questions, okay, that they did not list out the ratio, then okay, the profit will be shared equally. So this is the first thing you have to understand, okay, for the income statement. Now the second thing is how to do the current account. Now for the current account, there are a total of 5 items. So 1, 2, 3. Okay, for number 4 and number 5, I will put a star. For number 4 and number 5, I will put a star. Okay. So let's take a look how we do it. Now first of all the things that deducted, okay, with a less. Okay, so we'll go to the credit account, go to the credit side, because okay, it comes from the company, right? Say for example, add up the salary, okay, or so there are interest on capital. So remember that all the things that less, okay, deducted here, okay. So then it will go to the credit side. Now of course on the other hand, the interest on drawings added here, okay, so it will go to the debit side. So this is the first thing you have to grab it, right? Okay, so it is a kind of double entry indeed. Okay, so students, okay, always make mistake because they don't understand. Okay, and this is double entry. Now the difficult part lies on this one, the share of profit. Okay, now if it is a profit, if it's a share of profit, so of course, okay, we would do it in the credit side. Okay, we will do it in the credit side. But think about it. Okay, if question asks, okay, is a kind of share of loss. Okay, what about share of loss? So if you compute there are loss, you have to do it in the debit side. So don't just memorize. Okay, oh my God. Okay, the share profit. Okay, it must be on the credit side now. Okay, so if the company incur a loss, so you have to put it in the debit side. The last difficult items lies on the drawings. So you have to put the total amount of drawings in the current account. Now a lot of students omit this one, okay? So it's not just about the interest on drawings, but also the total amount of drawings. So so bear in mind, okay? So both total amount of drawings and the interest on drawings, so you have to put it down. So what you need to do, you need to look for, okay? Look for the drawings. Okay? So look for the drawings and put the total amount in the current account. and for the balance, it will put in the statement of financial position. Okay, so these are the most important stuff for partnership. In this topic, okay, first of all, you have to understand the meaning of prime cost, production costs, and total cost. Now, how do we differentiate them? For prime cost, you can see the word direct. Can you see the word direct? Direct. Okay, all these wordings would refers to prime cost. Yeah. For the production cost, it will only add up the manufacturing cost, or we call it production overhead. For the total cost, okay, so we will add up those non-production costs. Okay, so you have to differentiate these three terms clearly. So next, okay, we are going to take a look one question. Okay, so you can see there is a question here. Okay, so we'll take a look at how to do the manufacturing account. So first of all, the manufacturing account is divided into several parts. Number one, raw materials. So you can see that for raw materials, there is a big part here. Okay, so we will take a look then later on. This is the first part. Okay, I will put number one here, and then number two. So we would from the cost of raw material, we would do the prime cost. So that means we will add up the direct wages, direct expenses, all the direct stuff. Okay, and then next, what we're going to do, we will add up all about the production. Okay, all about the production stuff, including indirect wages. Okay, these. Okay, so all of them. Okay, so these are the indirect one. So the indirect production cost. Okay, so and then number four is about the work in progress. Okay, so this work in progress is the most difficult part. Okay, students always have a mistake here. Okay, so we will take a look at them later on. So so there are total 4 steps. Okay, 4 steps in manufacturing account. So let's take a look how we do it. First of all, we need to do the raw materials. Okay, we need to do the opening inventory, purchases, carriage inward, and minus the closing inventory. So there are 4 little steps. Okay, 4 little steps. So you have to bear in mind. Okay, opening, purchases, carriage inward, and then minus the closing inventory. So the skills will be usually when I tackle this kind of question, okay, I will circle down. Okay, raw materials, and remember that the most important point, or I would say usually students they may make mistake here, carriage inward. Okay, so remember that. Okay, so you have to put carriage inwards. Okay, so you put all these 4 stuff here. Okay, so this is the first step we need to do it. The second step, okay, we need to compare the prime cost. So I will find out the direct expenses, and also look for the direct wages here, direct and direct. Okay, so these two, okay, in the blue color, are for the prime cost. The third one, for the indirect one, okay, indirect one. So we have to add up all the indirect cost, including this one, factory wages, rent, depreciation. Okay, so blah blah blah. This one, indirect wages, will be classified. Okay, in here. Okay, in the indirect cost. Okay, so direct wages here. Okay, indirect wages here. Okay, so maybe I'll mark down some arrow. Okay, this one direct wages, and then this one is for the indirect wages. Okay, so don't make mistake. Okay, don't make mistake. Now for the last part, okay, we have to add the work in progress as starting, at the start, and then with the minus the ending point. Okay, so so remember that. Okay, you need to do it, otherwise there might be mistake. Okay, so look for here. Okay, look for the date. Okay, at the start we need to add it up. For the closing we need to deduct it. Okay, so that's how we do the manufacturing account. Okay, 4 major steps. Okay, and then you may follow. Okay, follow. Okay, remember that. Okay, the trap slides on the direct wages, indirect wages. Okay, these two, okay, they will enter separately. Now in this chapter, now I'm not going through all the concepts in very detail. Now I will do it in an exam approach. So I will talk about what you need to understand in the exam syllabus, and we will tackle this chapter in a very exam-oriented way. First of all, I think you have to memorize all the definitions of these concepts and principles. Okay, so you can grab it from the internet, you can grab it from the textbook. What I would like to focus is the second thing is about the application. Okay, so how do candidates apply these concepts? Okay, or let me put in this way. Okay, so how do questions asked? Okay, so what would examiners set questions about these concepts and principles? So I will go through them one by one. So for the first one, for the consistency, okay, it would refer to the depreciation topic. Okay, so that means the company should not change the depreciation method. Okay, without concrete reasons. Okay, don't change. Okay, don't change from straight line to reducing balance or blah blah blah. No. Okay, no. The second one goes to prudence. Okay, prudence, that means okay, don't overstate the profit. Okay, so that's why we need to have provision for the bad debts. Provision for bad debts. Okay, so why we need to project customers? Okay, they won't repay. Okay, you know that, right? Provision for bad debts is a projection. Okay, it's not real. Okay, the customer, they did not go bankrupt. Okay, we just project it. Okay, because we do not want the company to overstate the profit. The third one goes to accrual. So this one, okay, you understand, right? Okay, so that means okay, the expenses, they are recorded when they are when incurred, but not when they are paid. Okay, or revenue are not recorded when they are received. Okay, but the profit is generated. Okay, materiality. Okay, materiality, that means okay, we do not record a pen. Okay, $5 a pen. Okay, in the accounting books. Okay. So we only record those amounts, okay, with substantial amount, okay. So otherwise we won't record it, okay. Money measurement, okay. Money measurement, that means okay, we only record those things can be measured by money, okay. Say for example, okay, for goodwill, okay, it would be very difficult, right? The last one is business entity, okay. So usually it talks about the private use, okay. Say for example, the owner took some goods, right? The owner took some goods from the company for private use. Okay, so this one would usually links up with the drawings. So you know how to do drawings, right? Okay, so so these are I would say exam-oriented approach to tackle this topic. This is the last topic for this video. Now in this topic, we call it accounting ratios. So there are total five accounting ratios that you have to master, okay, in the IGCSE syllabus. So I will put down 1, 2, okay, in the middle, 1, 2, 3, 4, 5. Okay, so these 5 ratios are the things that you have to master. So what you need to do, of course, okay, you have to so let me put it down. Number 1, you have to, okay, I will do it in the right hand side. Okay, number 1, you have to remember the formula. Okay, so you have to record the formula of the ratio. Okay, and number 2, you have to understand there are 2 different kinds of accounting ratio. Okay, and the first one is called profitability. Profitability, that means say for example, as you can see in the middle, okay, gross profit ratio, and then the profit for the year, and profit of the return of capital employed. Okay, so all these, okay, so let me use a blue color to highlight them. Okay, so all these we regard it, okay, as profitability. Okay, profitability. Now this is the first type of accounting ratio. Now the second type, okay, we call it liquidity. Liquidity, okay. That means, okay, it's about the use of company current assets, okay, to repay the liabilities. Okay, it takes a look at the ability of the company to meet the short short-term obligation. So we will make use of the current ratio and the liquid ratio to assess the ability, okay, or to repay the short-term obligations. Okay, that's what we call liquidity. So right now, okay, we will take a look. So what we need to do in this topic. First of all, we have to understand all the formulas. Okay, all the formulas. So I will go through them one by one. First of all, for the gross profit, okay, gross profit as a percentage of revenue. So the formula will be very easy. So so what you need to do, you need to put the gross profit in the denominator, okay, in the top, okay, the gross profit, and then you need to put the revenue, the sales, okay, in the bottom, okay, the revenue sales in the bottom. So the same situation goes to K, okay. So you have 24000, okay, in the top, and then this one, okay, 1200,000, okay, in bottom, okay, in the denominator. Then you can, okay, compute the gross profit as revenue. And next, okay, let's take a look the profit for the year. So this one, profit for the year, okay, we may mark it down. So indeed, it refers to the net profit, okay. So you may mark it down, okay. For profit for the year, that means net profit. So you can see that in the answer. So here you can see, right? Okay, so this one, okay, 10,000 in the top, okay, and at the same time, okay, this time also we put the sales, okay, we put the sales in the denominator. Okay, the same situation goes to K, okay, 15,000, okay, goes to the top, and then 1200,000 goes to the bottom, okay. So the first two ratios to assess the profitability is the gross profit as a percentage and the net profit as a percentage. Now and then we'll go to the third one, okay. It's called the rate of return, okay. So rate of return, the meaning of rate of return, that means, okay, net profit, okay, net profit, okay. So I think you should mark it down, okay. So profit for the year, that means the net profit, okay, or we call it the rate of return, okay. The return indeed is the net profit. The return is the net profit. So the difficult part lies on, okay, the meaning of capital employed, okay. So if you have to check the capital employed, you have to go to the statement of financial position. The statement of financial position in the bottom left, okay. We can take a look this one, okay. I would use underline, okay. So it's financed by capital and liabilities. So what we need to do, okay, we cannot use this one. We cannot make use of 47000. We need to do the deduction, okay. 47000 minus 5,000, okay. So let me put it down, okay. So for the middle one, okay, so this one is 47000 minus 5,000, okay. So remember that, okay, it's capital minus liability. So for another company, I will do it again. So it would be 54000 minus 10,000, okay. So remember, we need to make use of, okay, the total amount minus the liabilities. So then we can have the capital employed, okay. So for return on capital that employed, that means net profit at the top and capital in the bottom. Then you can compare the percentage. So all these are about the profitability. So next, okay, we're going to do the liquidity, okay, liquidity. So there are two ways to do it. The first one is called current ratio, okay. Current ratio means we will make use of the total amount of current assets, okay, and then we will over the current liabilities, okay. So let me mark it down, okay. So current ratio, okay, that means total amount of current asset over current liabilities. Now we can do it for another company. So for K, the total amount is 40,000, okay. So we'll put it on top, and the amount of current liabilities is 10,000. So we'll put it here, okay. So this is how we do current ratio. It's one of the way to assess the liquidity. Another way to do it is the liquid ratio. Okay, so for the liquid ratio, there is one special thing. Okay, so we need to minus the total amount of current asset minus the inventory. Okay, so that means we need to minus this one. So this one, 15,000, it would be the inventory. For another company, this one is the inventory. Okay, so we will make use of the total amount of current assets and then minus the inventory. So that's how we do it. So these are all the formulas, for for the IGCSE syllabus. So so this is the first thing we understand. Now the second thing we need to do in this chapter, so is about comparison. So after we have the ratios, okay, of two companies, okay, so we have to compare it, okay, and then we have to draw some conclusion in verbals. Okay, say for example, okay, for profitability, this one, for profitability, K would be more profitable. Okay, so the first thing, okay, we have to draw, okay, is about the profitability. Now the second thing, okay, we need to draw is about the liquidity. Okay, so here, okay, so we can take a look the current ratio and liquid ratio, okay, to assess the liquidity. Okay, now so this is the first thing you have to understand. When we do comparison, first one, okay, we can do it in two aspects: profitability and liquidity. Okay, so these are the aspects. Okay, so you have to do it. Okay, so when we do it, okay, I think about, you can use these three formulas for the profitability and these two formulas for the liquidity. Now next, you have to give your explanation. Okay, so why, say for example, why would K be more profitable? Okay, why would K be more profitable? Say for example, okay, they would sell more goods because of the lower price. Okay, so this is the explanation you have to give. Okay, so yeah, I think you should mark it down. Okay, so we must give explanation. Okay, the same situation goes to the liquidity. Okay, say for example, okay, we have to explain why the current ratio and liquid ratio of J is perform worse. Okay, it's too high. You can see, right? It's too high. Okay, say for example, there are too much money being idled. Okay, so we have to give explanation. So these two are the common explanation. So I think, okay, you can mark it down. Okay, so that's all for this video. Okay, for all the chapters. Okay, for all the things you need to understand for the whole IGCSE accounting syllabus.